Nick Edgerton from Stewart Investors, welcome.
Thank you.
As a starting point, it'd be great to understand what differentiates Stewart from the broader range of sustainable and responsible strategies around the world.
We've been running sustainability funds since 2005 with our first Asia Pacific Sustainability Fund. I think our main focus is around sustainable economic development. And so not so many investors are focused on how does our investment contribute capital to a better human development outcome, as well as a lower environmental footprint as economies develop further.
Excellent. And you were telling me a kind of off-topic background around the name Stewart as well. You also, I believe, stewards of capital is an important part of your investment philosophy.
That's right. Stewart Investors nods a little to our former business, Stewart Ivory, which was bought in 2000. Stewart also happens to be the Scots word for steward. And when we invest, we focus very closely on who are the people we're handing over the capital to, how can we trust them, and who's stewarding a company through the full economic cycle.
And we hear a lot about the term decarbonisation, but a lot of that focus seems to be on renewable energy. Could you talk about some of the sectors and companies that you're looking at outside of renewable energy, but still within that decarbonisation theme?
Yeah, we think there's fantastic opportunity in the broad decarbonisation piece away from the renewables directly. So everything from, say, an Infineon Technologies in Germany, which is doing semiconductor design for power management in electric vehicles, through to an Alphen in the Netherlands, which is the leader in rolling out electric vehicle charging stations throughout Europe. And there's opportunities everywhere in the world. So we're also invested in WEG in Brazil, which is an electric motor business, highly efficient electrification of the economy, and even an Indian company, TCS, which is heavily involved in rolling out a smart grid in India.
And what's your universe of investments?
We invest globally, so there's somewhere upwards of 50,000 listed companies we could invest in, but when we're trying to pick companies, we start with a blank sheet of paper, and we're just trying to find 50 high-quality businesses to put into the portfolio.
It's still off topic a little bit, but are you negative? Do you apply negative screens or positive screens, or a little bit of both?
So the focus is very much on what will create a sustainable economy in future. When you think about that, some of the traditional sin sectors that fall into negative screens don't apply, so we're not investing in a lot of those sectors. We're very much thinking about what high-quality companies are there that have great sustainable development tailwinds behind them, so much more of a positive tilt. And by extension, there's a negative side to it too, of staying away from a whole load.
And how difficult is it negotiating kind of different cultures, or the different legislative environment across being a global strategy, investing in Africa, India, the US, Europe?
Yeah, it's different rules in different countries. We tend to try and stay away from government where we can. We generally don't like businesses that are reliant on certain policies per se or government action, because often before you know it, you're on the wrong side of government. And so that's a bit of a weakness. However, there's definitely some world best practices that you can see in certain environments, and where we can, we want to operate and invest in those ones. And sometimes when we get the opportunity, encourage companies elsewhere to lift their game and do the same, even if it's not required in their own country. But it's quite stunning how global the world still is, even with COVID. And most companies we invest in are globally operating, and certainly operate out of their listing country. So it's quite rare that they're only covered by one set of rules anyway. So we try and understand the broader global picture.
And how important is engagement with companies?
Yeah, engagement's very important. There's really, in our mind, a responsibility as equity holders, not just a right. There's a responsibility, and that's about engaging with companies to try and nudge them along the way towards looking for opportunities to improve their business. We try and do it respectfully, thoughtfully. We don't present answers. We more try and challenge with questions, just to encourage them where we see best practice. And it's often used through, perhaps better practice we might see with a peer, and challenging the company we're looking at to lift their game, to do the same thing, to show them it can be done. And so it's really important as an equity holder as part of that responsibility. Also teaches you a lot more about the company, and it gives you better insights into the people running it and how they think.
And one top high conviction idea.
Yeah, Diasorin, an Italian listed company. We've owned it for 8 years now. It's obviously had a fantastic run through COVID because it's one of the key companies that allows us to test for COVID antibodies. It's run and owned by a family, who own about 60% of the business, has a professionalised management team. The franchise is a leader in the niches of what it does around disease detection, operates a classic razor blade model, high recurring earnings, high margins, and the business is run very conservatively with a very big net cash balance sheet. It's not trading on a crazy multiple either. It's about a 3.5 times free cash flow yield, and growing at low to mid-teens, so should offer good returns in the long term.
Thank you, Nick.
Thank you, Drew.
Thanks.